Thank you for watching this preview video at xm.com. We'll be discussing upcoming inflation data out of the UK and the potential reaction in the pound. I'm Maria Pachordes, and joining me is investment analyst Achilleas Georgolopoulos. So Achilleas, the Bank of England was surprisingly hawkish last week, leaving rates unchanged. This week, all eyes will be on the November inflation report due out on Wednesday. What are we expecting from this data?
Hi Maria. Yes, last week the Bank of England surprised on the upside by being essentially less dovish than the market expected. Part of the reason is that still 3 members of the Bank of England remain hawkish and they vote for rate hikes, which is quite surprisingly. This of course means that the Bank of England is adopted and continues to maintain a more hawkish rhetoric. However, the market completely ignores that. It continues to price in about 110 basis points of easing in 2024. However, at the end of the day, data releases hold all the cards. Following last week's mixed PMIs, especially the manufacturing services, the manufacturing sector PMI was weaker than expected. This week, we will get the November inflation report. Both the headline and core indicator are expected to edge a bit lower. The latter is seen at 5.5%. Of course, these are levels that are not compatible with the central bank expected to embark on an easing spree quite soon. Therefore, there is great importance for these figures this week. We do have to highlight, however, that with the next Bank of England meeting coming on February, there is another inflation report in mid-January. However, every data point matters. Also this week, we get retail sales on Friday for November. Because the average earnings have been growing quite respectively north of 7%, there's a very strong reason to believe that there will be an improvement in retail sales, and that will probably be a trend that continues because going into the festive period, we know it's usually a very spending heavy period, and therefore we should see further improvement.
Turning to the pound now, if we end up getting stronger inflation prints, what reaction can we expect in the British currency?
Yes, the pound has had a very good period against the euro, partly because of the market aggressively pricing in easing expectations by the ECB. This outperformance, though, from the pound seems to have run out of gas, partly because the ECB last week was slightly more hawkish than the market expected. Now, going into this week, and if we get a small or even a very large downside surprise at inflation, the market would believe that rate cuts are probably going to happen sooner than later, and therefore we should see the euro-pound pair moving higher towards a 0.8658 area. On the flip side, an upside surprise, so stronger inflation, especially in the core component, would mean that the Bank of England will be less inclined to start cutting rates quite soon. Therefore, we should see the euro-pound pair moving towards a new 3-month low, essentially below the latest low of 0.8548.
Achilleas, thanks so much. This was a preview video here at xm.com.